Welcome back. I hope you're having a fantastic day. It is February the 9th of 2022. We're going to take a look at the markets, stock markets, crypto, and a couple of thoughts on why we are seeing this little bounce that we're seeing today. So let's go ahead and jump in. The stock market had a nice little recovery today. NASDAQ was up 2%. Tech stocks are recovering. Some of them had hit 30, 40, 50% off. Facebook made a nice little bounce today. S&P up 1.5%, the Dow up 0.86. So what's the big news? We're in earnings season and we have the inflation print tomorrow, and projections are all over the map for the inflation print, anywhere from 7 to 9%. And then the Fed is going to respond accordingly. So we're seeing the markets rally a little bit ahead of that news. We have the Super Bowl weekend coming up. That's a nice little bounce weekend. And then we'll have to see how things shake out as we get closer to the end of the month and closer to the Fed actually making some decisions about what they're going to do. A lot of people are saying rate hikes are priced into the markets. And I do not think that a 0.5%, half a point rate hike is priced in the market. I think the market's anticipating some rate hike, but I think if the Fed comes out strong with a 0.5 point and says that we're going to raise rates even more and more often, you're going to see a little bit of a sell-off after that news. Potentially, if the Fed comes out dovish, less aggressive on interest rate policy, then you will see markets rally again a little bit more, but we've got some time between now and then. One of the big stories of the day is Congress is moving to ban members from trading stocks as Nancy Pelosi finally drops her opposition. My guess is she has unloaded her positions now, so now she can drop her opposition to not being able to buy and sell stocks. So she cashed in, so now she can be in support of the ban on people in Washington cashing in on insider information and regulation, which affects, stock prices and values and things like that. So interesting times that we live in. And they've had a big, huge bull market to be able to take advantage of over the last couple of years. And things are changing with the Fed changing policy. So very interesting. Fed says no more QE. We're raising interest rates. Party's over. And Congress bans the ability of members to buy and sell stocks. Very interesting timing there, but we'll see how all that shakes out. So why are we seeing some of the bounce today? There's a lot of good news and a lot of big news out there for the cryptocurrency space and for Bitcoin. The Washington Nationals are striking a crypto deal with Crypto.com. So Crypto.com has bounced back today. We'll take a look at that in a few minutes. Well, we can go ahead and look at the chart right now on Crypto.com. That was one I was telling you about that might get a little bounce leading into the Super Bowl because of the ads and advertising. And this was a nice little trade. I've been in and out of Crypto.com the last couple of months here, trading this action as it's been dropping quite a bit from its all-time high of around 97 cents. A lot of big 30, 40% bounces in here that I've been trading on the swing trades. And it has rallied from the bottom of this recent trend, 58%. So not a bad little price action there. I didn't ride this portion. I got out right here in this area and awaiting a little bit of a pullback. Might do something with that ahead of the Super Bowl, but we'll see if it pulls back before I decide to do that. But didn't know that they were going to get involved with the Washington Nationals. So that's kind of helped give the price a little bit of a bump there. And there's going to be several FTX, I think, and maybe even Binance or somebody else is going to be advertising in the Super Bowl. So it'll be really interesting to see what happens there. JP Morgan is out again. So JP Morgan says that Bitcoin is 13% overvalued. They say the fair price for Bitcoin is 38,000, but they say it could reach 150,000 in the future. So very interesting with what's going on with the investment banking world and all of the projections about price and things like that. Wells Fargo has come out recently talking about digital asset allocation and management, saying that their clients and everybody needs to get into that. There's a story out there about that. Don't know where it is right now, but good news all over the place in the crypto world. BlackRock is planning to offer crypto trading. Insider sources are saying, so there's news all over the place about BlackRock. If you don't know who BlackRock is, They are the world's top asset manager, money manager. They manage a lot of pension funds, investment funds, life companies. They have $10 trillion of assets under management, and they're into all kinds of things, different types of assets, real estate, financial assets, annuities, things like that. But these are the top asset managers. When you look at the investable capital that's out there, these are in the trillions. BlackRock's 10 trillion. Vanguard is 8.5 trillion, UBS 4.5 trillion, Fidelity 4 trillion, State Street, Morgan Stanley, JP Morgan, Goldman Sachs is number 10 with only 2 trillion. They're a small fish in a very big pond. And so if you go down the list and look, there's Wells Fargo's 588 million. So, I mean, there's around the world probably $100 trillion worth of investable capital that could potentially not enter the space completely, but potentially take part in the space, that's going to take part in the space sooner rather than later, probably, if not by the end of the year, Q1 next year. A lot of these firms you'll see will start allocating to the space. And it used to be that you would risk your reputation, potentially your job, if you went anywhere near crypto. Now it's the other way around, where if you're not into crypto, if you don't have crypto offerings within your firm or within your investment bank, then people don't want to go near you. So the whole narrative is completely flipped in the institutional world, the investment banking world, in terms of exposure to the crypto space. Doesn't mean Bitcoin specifically, it means the crypto space. And there's a lot of different things and opportunities in the crypto space in terms of where that capital could go. But it's really cool to see the space. It's really cool to see the investment world come around and some of these asset managers setting up shop and getting ready to allocate to the space. And if there's $100 trillion worth of investable capital out there and you get 1, 2, 3, 5%, you're talking about $1 to $5 trillion. The entire crypto market cap's around 2. So you can essentially see an instant doubling of the amount of capital coming into the market. And if you think about what that looks like across the board, the Fed pumped $1 trillion into the market since March 2020. So you saw what that did, and where we are now is a direct result of the monetary policy of the Fed, the QE, and they haven't stopped anything, by the way. We are still, they are still buying bonds. The rates are still low. They haven't raised rates. They haven't quit buying bonds. So we have not let our foot off the gas yet. They have not put the brakes on yet. So the party has not ended completely. That's why markets have only dropped a little bit and have come back, because they realized, wait a minute, the Fed hasn't changed anything yet. So that's why I am saying I don't think the rate hike is completely priced in yet, because the Fed hasn't taken really any kind of action yet. They've backed off of the asset purchase a little bit, but they haven't completely eliminated it. So I think you're going to see some more downside when the Fed comes out and actually makes a move and starts changing gears and changing policy. Let's take a look at Bitcoin today. And this price action here, we've recovered this entire downward move here. Bitcoin has recovered, had the pop up here, a little bit of that. Was that going to be a BART? What was that going to be? And then rise up, a little bit of consolidation, rise up. Well, yesterday, Bitcoin was stuck in this range here, where we talked about 44,300 that it needed to clear in order to have continuation. And Bitcoin has just recently broken that level and is trying to decide if it's going to move forward. But let's take a look at what we could potentially be looking at here. And I pulled together a little fractal. And if you look at this fractal, it looks really interesting, doesn't it? This price action right here, a little bit different at the bottom, but it fits in here kind of nicely if we stretch it out a little bit to kind of match up with what's going on. Looks pretty good, other than this little area right here where Bitcoin bounced versus dropping a little lower, putting in a double bottom. Like we had talked about, what we were looking for was that double bottom kind of like this. But what I think we had got instead was a double bottom like this, where the second bottom was a little higher instead of a little, lower or equal to, just maybe a little bit. It's up a little higher. So I believe a couple of people have asked about the double bottom. I think that double bottom has already occurred. We had that 35,000 close. Then we had this 36,900 close. I think that was your second bottom. Now we're off into the retracement. And this fractal looks a lot like what we're experiencing. And let's see how this plays out. If you look at this, what we've put together here and how this could potentially play out, it looks a little something like that in terms of what we're talking about. So where did that fractal come from? I mean, that just looks uncanny, doesn't it? Market maker activity right there. So where did this fractal come from? Well, let's take a look and I will show you where that fractal came from, and we'll take a look at something else. Let's leave that. Let's roll over here back to this area here that we've been looking at, which would have been that September timeframe where Bitcoin dropped off, had that consolidation, had the double bottom, and then moved into the all-time high right over here. We were looking at that the other day, where on the daily, how those two areas looked an awful, oh, that's June, July, an awful lot alike. We're at right here. We were initially looking for something like this in a double bottom, where it bottomed maybe a little bit lower and then retraced. But then we started thinking, well, maybe it could be something like this, where it has a shorter consolidation period, double bottoms just a little bit higher, and then retraces. And I think that's what we've got here, is this double bottom. So that's where this fractal comes from, is right here. So another theory that's out there is that maybe it could be potentially following this type of fractal right here and kind of bounce on from there. And if you take a look at what that looks like on the daily and pull this out, you could potentially move this right into here, and you have something like that. So that could potentially be what's going on right there. That matches up as well. So similar to what we're doing, if you just cut it off right here and move it up, since it didn't roll over as long, didn't go as many days as this whole area here, or maybe just bring this fractal back a little bit like that. So anyways, a couple neat things to look at in terms of fractals and what could potentially be be playing out in the charts. We don't know yet until Bitcoin gets through this level right here. Got a little bit of previous resistance turned into support here as Bitcoin rolled on through. And again, what we're looking for is we're looking for a retracement to the 0.5 to potentially the 618 level right up in here, Fibonacci level, excuse me. A little dry throat here. The 0.5 to 618 level, 52 to the $55,000 level is what we're looking for. So let's take a look at a couple other things. So a couple of people had asked, what happens to altcoins during this time? So as you have seen, as Bitcoin is rising, altcoins are rising. So if Bitcoin does continue to retrace into that level that we're talking about, that 0.5 to 618 Fibonacci level, and if it continues its move on upwards into that level, and then ultimately rolls over to recheck these lower levels, or maybe even reverse back up for more continuation, what happens to altcoins? Altcoins are going to kind of follow, but as Bitcoin rolls over, money flows out of Bitcoin into altcoins. Altcoins continue, and that's where you see that alt season, and altcoins can make a run to new all-time highs before they finally end up rolling over, and you go into a longer, more consolidatory cycle. You can call it a bear market. I don't think we're going to see a crypto winter like we've seen before, where you have a year or two of just really low prices of consolidation. I think the cycles have changed, and we're going to talk about that in the next video when I talk a little bit more about swing trading and things like that, cycles, ranges, and trends, and swing trading versus day trading, that kind of stuff, and how I do stuff. So we'll get into that in the next video, but that's potentially what happens to altcoins. As Bitcoin rises, altcoins will rise with them, but as Bitcoin rolls over, money comes out of Bitcoin, Bitcoin dominance drops, altcoins go off and set the new all-time high. Last time, 2017, 2018, they all went at the same time. This year has been different because we've already seen some altcoins go and set all-time highs. So we'll just have to wait and see if it plays out like it did the last time. But the good news is, I think with the adoption that we've talked about, with the new capital coming into the space, with corporations, individuals, institutions, getting more and more comfortable in allocating to the space and setting up shop, I think we might be seeing less of a longer term bear market potentially, and more consolidation and a steady rise. And you'll see some of this volatility level out, where it maybe starts to look a little bit more like the stock market in terms of a steady upward trend, where you get 10% pullbacks here and there. That, 10-15% pullbacks. This is the Dow Jones over a long period of time. It just has a steady upward trend. This was the March 2020 pandemic, but take that out of the equation, and it had that steady uphill trend. You could see cryptos and Bitcoin doing more of that type of thing, but right now it is an exponential asset that can exponentially go up, it can exponentially go down. So let's take a look at something that people have been talking about. These are the moving averages here, the 50, 100, and 200-day moving average. And where our theory came from was that death cross, where the 50 crossed over the 200 right here. And we looked at that occurring at the same exact amount of days from the peak in both cycles, both recent, cycles here or ranges here. And then we looked at over here where the bottom came in so many days, and that's where we got that February 14th timeframe. But we're ahead of schedule there. Bitcoin has already put that second bottom into the retrace right now. So we'll just have to see what level that goes to, if it gets up into those Fibonacci levels that we're looking for. But something else that people are looking at is this cross here, where the 100 crosses over the 200. And what has happened to Bitcoin in the past when that happened? It happened right here, and we saw a little bit more downside. Price was dropping when that happened, and you could see that the 200 was kind of moving up. The 100 was coming down sharply, and it crossed, and we had a little bit more downside. Over here, our conditions are a little bit different, where the 200 is coming up and the 100 is coming down sharply, kind of like over here. But that, we're still under the 200-day. We've reclaimed the 50 for now, but it's starting to cross again. So the question is, what's going to happen here with price? So these moving averages, again, they're lagging indicators. They're taking the average of the price over that many days. So they are just reflecting what's already happened. But if you go back and look at where this has occurred in the past, and if you look at these crosses in the past, you can see they all have, when that 50 crosses over the 200, they all represent downside afterwards for a little bit. So we'll just have to see what happens here and if that holds true on this move, but it would indicate that's what we're looking at. Let's take a look at the logarithmic growth curve. And we talked about these ranges here. Whenever Bitcoin dropped down into this lower range, that sometimes it could stay in there for quite a while. And this is what, a typical bear market crypto winter looks like. Just to give perspective, we're on the daily chart. This was 446 days, a little over a year, that it was in that last area of a bear market crypto winter. And prior to that, it had dropped down in, but not for a very long time. It stayed in there right here in this range, looks like 174 days, so about 6 months. And then before that, it was again another long-term, little over a year in this area. And each time it's dropped in there, it's tried to bounce out and then ends up going back. And then when it pops out, it goes off to a new all-time high. So right now, Bitcoin dropped in, it's popped out. So we're waiting to see, is it going to drop back in there? We're going to see a little bit of a consolidation and then back into a run for an all-time high. And that is definitely a possibility. And that's what these consolidations are all about. So like I said, even if Bitcoin drops, it's not going to stay down there forever. It's going to come back. More investors are going to get into the space. The lower the price goes, the more people you're going to have that are going to buy in, especially at the higher levels, the institutional levels, investment banks. They're looking for more attractive prices. And that's why you see a lot of these narratives out there from the investment banks talking about, one day they're saying Bitcoin's going to hit 150,000. Next day, they're going to say it's only worth 38,000. They want to get their entry. They want to be able to gain some upside. So a lot of this is market makers activity. When you see these fractals and these price patterns, this is market makers here filling orders. And, they have buyers and sellers, and the market makers have to drive price to fill the orders for people that are looking up here to sell. They have to drive price down here to fill the orders for people that are looking to buy. And then you have these moves here where people are shorting and they have to cover their shorts, so price rises. And where people are longing, they have to cover those bets, so price drops. And that's where a lot of these big moves can come from. And what I am feeling and what I'm thinking, and right now until we get to these levels and see if it'll break out, is that we're going to see, like I said, we're going to see that retracement continue up into that level. We're going to see a little roll over. We may come back and test, and ultimately, I think we may roll over for a more longer term consolidation so that investors can take profits here, roll over, consolidate a little bit more, and then we'll be making a run for a new all-time high. And we'll talk about it in a future video based on how this plays out, where I think that all-time high could be. I already did one video where it brought it in around the 80,000 mark next before you see a pullback. And then, up from there where you're incrementally growing, where you have these little rollover trends here. So we'll just have to see if we roll over, continue up, or if we roll over and continue down. And all-time high price projections, new all-time high price projections will be based on what we end up doing here. If we retrace and roll over into consolidation, or if we follow this pattern here, we roll over and then go off for a new all-time high. If that happens, I expect 78, 80,000, and then roll back down. If it comes back and goes, then we have more fuel to make a bigger run and go towards that $100,000 level that everybody is targeting in the investment world right now for Bitcoin. So these are the things that I'm looking at right now. And tomorrow is going to be a big day with the CPI print. We'll have to see what the inflation print looks like, see what the talk on the street is from the Fed board members that are talking about different number of rate hikes that they foresee in the future and things like that, and how markets are going to react to that. So nice little bounce today, and we will see what tomorrow holds. Until then, have a great evening, afternoon, morning, wherever you are. I'll see you on the next video.